All right, welcome to Coffee with Marcus and Mark. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And today is Wednesday, September 28th. So we have 3 more days left in the month. And yesterday, the S&P 500 made another low for the year, and that's actually a 2-year low. So now stocks have been falling for 6 days straight. The VIX, the fear index, keeps rising. The 10-year yield overnight hit 4%, a level that we haven't seen since 2008. So how much longer will this go? When will the market bottom out? We'll talk about this in the show. Plus, we will show you our current positions and how we are trading the markets. And with one of my positions this morning, I have to make an important decision. So let's make this together here. So as you can see, there's a lot to talk about. So let's get started. But if this is your first time here, hi. The dude in black, me here, I'm Markus Heitkoetter, and in white, this super smart guy over there is my head coach, Mark Hodge, sporting a Rockwell shirt. Which one? Trade what you see, not what you think. There we go. So, see, we are real traders who trade live accounts here, and we got a lot of trading experience, and we're showing you how we trade these crazy markets and hope that you find this beneficial. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. With that said, let's take a look here at the S&P 500. So yesterday making another low for the year. And if we look at this, I mean, these levels we haven't seen since November 2020. So almost 2 years ago, Mark. What's happening?
I mean, it's what we've been seeing this year. Just this drift lower, concerns over interest rates and higher yields and recession or no recession. But it does look like we're flirting with these June lows and seeing some possible support. Yesterday was a little bit of a disappointing reversal because we opened higher and rallied and then ended up making new lows. But hanging in there today.
Yeah. So today we see a little bit of a bounce, and I mean, right now I said interest rates, they are just in focus here, and we see the 10-year yield. It hit overnight. It cracked through this magical 4% line, and this is a level that we haven't seen if we switch to a weekly chart here since 2008, I believe. Last time we were up there. Might have been 2010, but yeah, it has been more than 10 years.
Yeah, absolutely. I think I saw a headline that 30-year mortgages hit 7% yesterday.
Whoa, whoa. And
I
as you
didn't
can see,
verify that, but wow, things have changed in a year or in 6 months.
geez, yeah. I mean, so what we see that if you look at a 5-minute chart, it has been pulling back ever since. So cracked the 4%, and now it has been pulling back. I mean, actually down 4% for the day. So we're now trading at 3.78.
That's nice, and that's probably why we're seeing a bit of a pop here across the board in the overall markets.
Yeah, it's also super interesting because we keep looking here at the probabilities. And yesterday it was a 70-30 in favor of a 75 basis points, but now it's coming down. It's almost 50-50. And again, the next meeting is 35 days away, so we'll see a lot of trade-off in between. But it's quite interesting the difference a day makes.
Yeah, I mean, we mentioned it's going to be all over the place right now. Traders are just trying to figure out what the heck to do. Uh, there's a lot of data still out there before the Fed's going to make a decision. So right now, it's really anybody's guess. It kind of doesn't surprise me that it's all over the place, just because traders are crazy.
Yeah. So we had a few reports coming out this morning. Pending home sales came in worse than expected, which is also just weird because yesterday we had new home sales hitting a record high for the month, and then we have pending home sales that are now getting lower. So it's just a mixed bag, and we have all of the Fed members speaking this week. And it's also interesting. It seems that there's not a unified front when we listen to the Fed members.
That is interesting because it seemed like based on the meeting that there was a pretty solid overall consensus, but now we're hearing individually there are different takes. So one more reason for the projected Fed funds futures and probabilities to be all over the place as traders try to figure out what's going on. But I still think that the biggie for the Fed and also Fed funds futures is going to be Friday.
Yeah, Friday, the core PCE price index, that is an inflation gauge, and that's the Fed's favorite inflation gauge. I mean, of course, they're paying attention to the CPI, to the PPI, but this is the one that they like the best. And this is coming out this Friday. We talked
Yeah,
about
and
it
the reason
yesterday. Sorry, go ahead.
Oh, I'm sorry. I was going to say the reason why is because this measures the change in the price of goods and services purchased by consumers, excluding food and energy.
Right, which is different than the CPI. It's measuring just the listed prices of goods. And this is where it's really interesting because when we looked at this a few months ago, I believe, of how this is done, and they're really literally going to companies' websites and looking, okay, what are prices right now? And they're looking actually at these flyers that you get in the mail. I think that nobody looks at them anymore, but but these guys do, not the Fed, but the guys who are compiling the CPI. So that's super interesting. All
Agreed.
right. and, and with that said, so one of the things I wanted to look at also is the VIX, because the VIX overnight we opened here this morning at super high levels, at levels that we haven't seen in a while, and we've been talking about it. Typically, the level here around 30 is has been a pretty solid level. Whenever we dip above, this is when we see that there's some fear, but also seems that right now it is pulling back. Markets, if you look at a 5-minute chart of the S&P 500, opened slightly higher, and then right now pushing a little bit higher. So getting close to a 1% move here this morning thus far.
Yeah, about 1%. And today the S&P and Dow kind of moving together, and the Nasdaq lagging a little bit.
Yeah. All right. Let's take a look at some of the positions that we have. So, dun, 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 dun. Let's take a look at Google. And you see, yesterday I annotated it a little bit because I thought, ooh, this would be probably cool. So let me know if you guys like it. So if you're watching this here right now and you like these annotations, then give us a thumbs up here really quick, because then I will do it on other charts here as well. So again, 826, I sold the 108 put in Google expiring 9/2 for $80 per contract, and traded 12 contracts here for 33% annualized RI. And then as you can see on 9/2, Google closes at 107.85. I have to buy Google at 108. And this was super interesting because you did the same thing, but you did not get assigned.
Yeah, when there was a little movement after hours, this is where the put buyer has a right. As a seller, you have an obligation. So when the markets close on Friday, you're obligated if the put buyer says, "Hey, I want to execute or get those shares assigned," and if the put buyer chooses not to execute that put, they can notify their broker and make that decision. So it's a bit of a lottery at that point, and I did not get assigned.
Yeah, I want to put the dotted line in there so that we all see where I got assigned. So you did not get assigned, and this is why you traded Google again a few days later, and you chose the 104 strike price.
103.50 actually.
103.50, yeah.
Yeah. Yeah, so I decided to kind of reset based on some of the movement that we saw there. So I sold the 103.50 put, sold the 104 calls, uh, but yeah, in at a slightly different price.
And then you got assigned as well. So right now
Yes.
you bought shares at 104, I have shares at 108. So right now, obviously, I cannot sell any calls against it. You've been able to sell calls against it earlier this week.
Yes, I sold the 104. I'm trying to close at 90% max profit. Not quite there yet. I have an order to close at 4 cents. We'll see what happens today. It's 11 by 12 right now.
Yeah, but I've already been able to collect quite some premium here. as it moved all around by selling the 108, 109, and even the 1010. So I collected more than $3,500 in premium, close to $4,000. And with that, we can actually hop over here quickly to the trading log. And this is where we see I've been able to lower my break even already to 104.80. So I'm very happy with this position right now. Again, cannot sell calls against it, but that is okay. I'm absolutely okay with that. Because, I mean, if you look at it, and this is where you see, thus far this year, we can zoom out, oops, not zoom in, zoom out a little bit. In realized profits, I'm at $120,000. So based on the $250,000 that I started trading with in the beginning of the year, that's like what, 47, 48%. So even if I would not earn a single cent of premium for the remainder of the year, I'm still up. What is it, 47, 48% for the year? When the S&P is down 17, 18, 20%. So I'm very, very, very happy with this. So I'm not concerned at all that right now for this particular trade, let's go back here, I cannot sell any calls. And I mean, we'll see. If you get a bounce here, might be able to do this, but I'm very happy thus far.
I wouldn't complain at all.
Yeah. NVIDIA, a very similar situation. So I got assigned 600 shares at 195. I mean, I've been collecting premium, oh my gosh, on NVIDIA quite a lot. Let's take a look at this. So on NVIDIA, I've been able to collect more than $12,000 in premium. So I was able to lower my break even to 174. And again, if I'm not collecting any more premium on NVIDIA for the remainder of the year, $12,000, close to $12,500. I'm very, very happy with that. But I believe that NVIDIA is bouncing back. We heard some news yesterday where both JP Morgan and Citi actually said that NVIDIA has a price target of 220 to 240 over the next few months. So we'll see. Today, very nice, up almost 2%. So we'll see. Now, my NVIDIA is your AMD, and you're in a similar situation here.
Exactly, exactly. So I hold shares there. I've been able to bring down my break even nicely. Of course, I would rather be trading at 100 rather than 68, but I feel comfortable holding this position. That's what we say whenever we decide to take a trade. It's a stock that we want to own, and we're comfortable owning it at that price. So if I'm in it for another month, great. If it takes 6 months to let it go, that's no issue. That's part of the wheel.
Yeah. All right, let's talk about the other two here. Let's talk about TPR, because with SU, this is where I said I want to put a trade on, and I want to make a decision here, maybe live together with you. So TPR got assigned at 2,700. So here also right now bounce back. Overall here also very happy with the TPR position. Because I have been able to collect almost $8,500 in premium, but little added bonus. Also, almost $1,500 in dividends, because I've been holding the stocks and they've been a good dividend payer. Either way, both of them.
Yeah,
So
not bad.
This brings up my total P&L for these to close to $10,000. My break even to 33, 34. So I'm really, really liking this. So I'm absolutely okay with that. So let's go back and let's talk about Suncor. So that's an interesting one. And I also annotated it for you so that you can see what happened here. And I want to zoom out a little bit so that you can see it. So on 9/19, I sold the 29 put for $25. And I did, I think, 40 contracts here. 62% annualized RI. Then Suncor closed on 9/23 on expiration day at $27.20. So I had to buy it at $29. And today, nice move to $27.84. And I haven't sold calls against this existing position just yet. So I thought we look at the calculator together and see what should I do here. And so we basically have two possibilities. I can either sell calls that are expiring this week against my existing position, or let me just use this one. Okay, so I'm changing this here, and I want to see what happens if I do it next week. So this is where I bring up the calculator. I got assigned at 29. And let me just get the current quote here. So the stock purchase price actually is also 29, and see what I could get next week for the 29. Oh, that's nice. I could get probably bid ask right now is 45 over 55. So I think I could get 50. And if I plug in 50 here, that would give me 62%.
Yeah,
That's not bad at
not too
all.
bad.
So that's for next week. Yeah. Go ahead, Mark.
No, I was saying not too bad at all. And this is where, yeah, midweek, I would start to look at both scenarios, this Friday and next week's expiration. But not bad going out there to October 7th.
Yeah, let's compare it to this week. So if you're going for this week, right now the 29 is 10 over 15. So realistically, I think I could probably get 10 cents, right? Because it ticks in 5-cent increments. So it's unlikely that I can squeeze in between. It's possible, but maybe I can get 12, maybe I get 13%. So let's just say that I could squeeze in between and get 12%. So that's 50% RI. So I can either collect $480 for the next 3 days that we have here. So we have today, tomorrow, and on Friday, and make $160 per day. Or I could get out to next week, get the 50 cents here, and make $200 per day.
Yeah, this is interesting because you could see in the prices, the bid and the ask, everything's in nickel increments. So if you sold for 10 cents and the stock pulled back a little bit tomorrow, it's not likely that you're going to be able to close for 1 or 2 pennies, right? So you really have to hold it to expiration if you go this Friday. Where if it traded in penny increments, it might be worth buying back and then considering going next week if that was possible. Uh, I did see the quotes at 10 by 20 before we started the call. So maybe, just maybe, there's some interest at 15. Would that change? Like, because right now, here, to be honest, Marcus, I like next week better. But does 15 cents for Friday change your opinion?
Well, this is where we go back. 15 cents for Friday makes both of them absolutely equal, right? So this is
Hmm.
where I could actually get $200 a day and 62% annualized for this week and next week. But I'm really very strongly leaning towards next Friday, because
Yeah.
if then tomorrow we see a little bit of a pullback, I might be able to close it. And then next week, as we are moving higher, sell the calls again.
Yeah. Yeah. No, in this case, I agree. The 15 cents is decent, but right now it's not a guarantee. I think 50 cents for next Friday is realistic, and $200 premium per day is pretty nice.
That is pretty nice. Okay. Let me just ask you here before we continue. Is this helpful at all, as we are going through very specific examples here and looking at trades together, and so that you see a little bit the thought process? Because if it is, do us a favor and leave a comment and let us know that you're enjoying us, and also give us a like here. By the way, if you would like to know of how exactly we are deciding on this, I made a video that shows you, okay, how do I decide whether I should trade this week's or next week's call, and also what strike price I should do it. So take a look at this one. You're going to enjoy the video, and then we'll see you again tomorrow morning.
Happy trading, everybody.